Okay, so I don't see any questions in the chat. I don't see any questions in the chat. So I assume we are all good in that regard. So we ended off with exercise 3. All right. So we're quickly just gonna get into exercise 4. Exercise 4. Okay, and here this paper wasn't actually that bad, to be honest with you. Yeah, didn't seem like it was that bad. So let's see here. Under the required, let's go to the question paper. Under the required, let's scroll down to question 4. Under the required, they said generalize adjustments 2, 3, 7, and 8 only. Narrations not required. Okay. Remember to show all your workings. Okay. So they want you to do journals there. Then prepare the statement of profit and loss and other comprehensive income. All right. For the year ended 30 April 2020. Remember to show all your working. And if the amount is added or subtracted, okay, right, that's 22 marks. And then prepare the statement of changes in equity for the year ended 30 April 2020. Okay, so this is not bad at all. So again, guys, here, can you see what I was telling you? You have to know your statements. Okay, you have to know your statement. Then these are the adjustments according to a physical stock take. So I'm just going to talk about all of them, what needs to happen with them, because who knows what adjustments they're going to ask you to do. Okay, so according to a physical stock take, stationery on hand amounted to 4,500. Okay, so again, we're looking and we're saying, okay, how much stationery did we write in our books? We said 84. Okay, 84,500. So we now need to deduct that by 4,500. All right, to reduce that expense, and then consumable stores on hand will also be affected. Okay, inventory, same thing. It amounted to 147, but in our books, how much did we have? 149. Okay, so we need to increase cost of sales and decrease trading inventory by 2,000. Okay, an amount of 2,500 was prepaid on carriage on sales. Okay, on sales on goods that were delivered in March. Okay, when are we doing this thing for? Okay. Okay, no, but it's fine. April. Okay, no, then that's fine. 2,000 was prepaid. That was delivered in March. Prepaid. Okay, so in other words, it was paid in advance. So the accounts there that are going to be affected is expenses, prepaid expenses, and then obviously prepaid expenses, and then your carriage on sales. Sorry, I heard someone. Aye, that prepaid thing. Sir, practice, 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 and you'll be perfect. Trust me, you'll be just fine with this stuff. So yeah, it gets confusing when you haven't practiced or when you're not so sure what this is all about. So I suggest that you go to my unit 4. I think we touched on it in unit 4 when we're going through the slides, the theory side of it, just to update yourself on prepaid expense, accrued expense, income received in advance, and accrued income. Those 4, all right? What they are, what are we talking about when we mention them and stuff? Just go through the theory there. You should be good. I feel like they're going to say they bought in advance for like 4 months, and on the 5th month they paid 8 months in advance. Okay, I'm not really getting your question there or your statement. So if you can just switch on your mic and then, feel free to ask. And then maybe I can try help from there.
So I feel like it's going to be, they said that they paid for 3 months in advance. So let's say they started in January, so they paid till March. But then in April, they paid again till like July. Like, yo, so those ones, could they ask us something like that? What's the possibility of that happening?
Nah, they wouldn't. They wouldn't try to ask you something like that. I think in real life that could happen, but I don't think they're trying to test you that much. So they wouldn't ask something like that. Typically, it's 1 month that you've paid in advance. Could be 2 months, but yeah, I've never seen them ask for like 3 months in advance type of thing. But even if they did, that whole 3 month period that you've paid in advance is what you're removing. Yeah, well, yeah, I can only speak from past experience, but who knows? Anything is possible. But anyway, regardless of what period they give you, whether it's 8 months in advance or 3 months in advance, you would have to calculate that, and I'm sure they would give you the rand amount. If they don't, then you'd have to calculate how much were you paying every month, and then say, okay, 3 times that amount every month, or 8 times that amount every month. Okay. Um, and then you pull that out of, in other words, you deduct it from the respective account since it was paid in advance. Okay, then that will obviously affect prepaid expense. All right. Um, so yeah, that's how that would then be handled. But thank you very much, Muzamil, for the question. Now I'm going back to the paper there. So that was two. Then number three, a debtor, Joe Jones, is insolvent and his debt 3,500 must be written off as irrecoverable. So this is obviously credit losses that's affected, and obviously your debtor's control. Okay, those are the two accounts there. Then here, allowance for credit losses must be adjusted to 2,000. Allowance for credit losses. Okay, so we have to go and see what was our allowance for credit losses before. Allowance for credit losses 2,500. Okay, so this is going downwards. Okay, we're reducing our allowance for credit losses from 2,500 to 2,000. Okay, so that's a 500 difference. So allowance for credit losses is going to be affected in that we're going to need to debit that. Remember, allowance for credit losses is the negative asset. So we're debiting it because we know negative assets increase on the credit side and decrease on the debit side. So that's why we're debiting that. And then allowance for credit losses adjustment, we're going to credit that, okay? Because now in this scenario, specific scenario, we treat that like an income. So it's going to affect your other income in the profit and loss, okay? And then we have provide depreciation on vehicles 55,000 for the current year. So here they've actually given you the depreciation. They just want you to record it. So it would be 55,000 depreciation debit and then credit allowance for accumulated depreciation 55,000. Okay. The owner withdrew 215,000 cash over the year for his personal use. Okay, so this is drawings, all right, and bank is obviously going to be affected. The entry still needs to be recorded. Okay, so we're recording it like that. And the amount of 1,000 for telephone was incorrectly debited to the salaries and wages account during April 2020. Correct the error. So 1,000 for telephone was recorded in salaries and wages. So salaries and wages, you're going to credit by 1,000, and telephone, you're going to debit by 1,000 to correct the error. Then young traders invested the fixed deposit with ABBA Bank 1 May 2019. The fixed deposit will mature 30 April 2021. Interest for the current year must be provided. Okay, so we now need to record that. Okay, so we'll quickly check to see, okay, what was the fixed deposit that was invested and what is the interest rate? So fixed deposit 75,000 at 12% per annum. Okay, so 12% of 75,000 will then give us the interest amount that we then need to account for in our books. So they only wanted us to do 2, 3, 7, and 8. Prepaid expense, that was for the carriage on sales. So there you have it. Prepaid expense, remember that's a current asset. That's why we're debiting that. And then carriage on sales, that's an expense. So we're crediting that because we're reducing it. All right, credit losses, an expense. Bad debts, same thing. So here you could have put slash bad debts, 3,500. And then here, debtors control is decreasing, or you could think of it, the personal debtor, Joe Jones. Okay, either one would be correct. Then the telephone, remember we're rectifying an error. Telephone 1,000 increasing, salaries and wages decreasing 1,000. Then accrued income 9,000. Okay, this is money due to us, remember, on the fixed deposit, and then interest on fixed deposit 9,000. So that's all they wanted us to do on the journals. Okay, that was part A. The next bit was to then adjust or do your income statement. All right. So here revenue. So in other words, sales minus your sales returns. Okay. If you don't know this statement, this was not an adjustment, but you need to know this is what you do when it comes to your revenue. It's sales minus sales returns. Okay. In the question there, they actually gave us sales and they gave us sales returns. Okay. So you should know that. All right. Then cost of sales. This is that 2,000 that I was telling you about, where we had that discrepancy in trading inventory. We've added it to cost of sales. Okay. Then here salaries and wages. Can you see the adjustments? 1,000. We've removed it. Stationery. We removed the 4,500. That should be 4,500. Not. All right. And then here carriage on sales. Okay. We're reducing that expense. Remember, by 2,500 because it was a prepaid expense. And there you go. Credit losses, remember there was that one that we had to account for. They're adding it in. Then telephone, we're adding in that 1,000. Okay. And then depreciation also was an adjustment that we needed to do there. And there you have your net loss for the year. Okay. That's all you need to do there. That was 22 marks. Okay. If you know your adjustments, that's easy marks for you. Easy marks for you. Then here, part 3, they said do the statement of changes in equity. Okay. So remember, to do the statement of changes in equity, I don't want you guys to cram this stuff. You're literally saying, what was last year's capital balance? Capital. Okay. Then we're saying, did we make any capital contributions? All right. Contributions. Okay. Then we're saying, plus any profits. Okay. And obviously minus any losses. Okay, right. And then finally minus drawings. Wings. And then you would have your new capital balance. All right, so this is your statement of changes in equity. You don't need to cram this, okay? So literally you have gone to your question paper and you would have gone to capital there, 1 May, can you see? 2019, what are we doing it for? 30 April 2020, okay, year end. So that's your opening balance, okay? That's your opening balance. Let me go back, yeah. That's your opening balance, 1,000. We didn't see anywhere where they wrote about additional contributions. Then we know that we made a loss. And guys, you'd probably, even if you got the wrong calculation in your profit and loss, right? By virtue of doing this, you will have probably gotten a method mark, okay? It shows that you know, okay? Then finally, drawings, you deduct that. They did tell us about drawings there somewhere, okay? And then you got your new balance. And that was a whole 5 marks, okay? So an easy 5 marks. If you know this, just another easy 5 marks here for you. Okay. But I don't think anybody has problems with that there. So guys, question 5 again is much like what we did yesterday. Appropriation account. Okay. But let me read it and then I'm just going to display it for you guys. So you'll see, this one is very, very much. There's only one thing that's different from what we did yesterday. So here, this is a partnership question. They're asking for the appropriation account. Okay. So open, post to, and balance the appropriation account in the general ledger of Newcastle Enterprises for the year ended 29 February. And here they say round 2 decimal places. Okay, right. Okay. So there we have our opening balances for the financial year on the current account and stuff. Here, can you see interest on capital, 5% per annum on the capital balances, interest on drawings, 12% per annum, interest on current accounts, 7% per annum. Nothing new, all right? Both partners must receive an annual salary. Those are the annual salaries. Liverpool must receive an annual bonus, one of the partners. This time they're telling us what the bonus is. Yesterday, they told us it was, I think, 10 or 20% of their actual salary. And then this time, this is the one thing that's different. 35,000 must be transferred to the replacement reserve or at the end of the financial year. That's the only difference. Everything else is the same. Here now they say remaining profits must be split between the partners following in the following ratio. There you have it. Okay. So no rocket science there. Okay. Very nice question. 20 marks. Cool. Let's see how we were supposed to deal with that, or should have dealt with that. So obviously, you know, guys, we should be able to, with having done depreciation, we should be able to also then do what you call it, the necessary interest calculations and stuff like that. So that should not give you guys problems. If you can do depreciation, you should be able to do those. Where were we? Question 5. So here, can you see? They said profit and loss. Okay, that's how much we have in profit. Let's see, where are we supposed to get this amount? It should be, they should have given to us in the table. Did they? Yes, they did. Profit and loss. Then we have a replacement reserve there of 65,000. Okay. All right, let's see. Ooh, I think I may have forgotten to include that. Okay, replacement reserve. Yeah, so this 65 should be, let me show you where it should be. In fact, I'm going to insert it. Base reserve. Line. I think I'm lying. I think actually it is supposed to be included there. I should have included that there because that's the replacement reserve from all the monies that we've had. Okay, but anyway, so this amount here would have been adjusted. These would also have been adjusted because the totals here would be different. Okay, so I should have included it there, but just for the sake of, you know, obviously finishing in time. So yeah, just pretend like they didn't give us a replacement reserve, but at least now you know exactly, since you have this also on video, where you would have placed it. Okay, now remember, so here, remember, it's showing interest on drawings. We're penalizing them, so that's money coming in. Interest on current account, that's money coming in. The balance, that means that they had, the balance was a negative balance on their current account. Okay. Then interest on capital, we're rewarding them, money leaving the business. Salary, money leaving the business, money leaving the business. Bonus, money leaving the business. Replacement reserve, all right, we are taking this and putting it into a different fund. Okay, for the year. Remember, they said we must hold back 35,000. Then we say, what is the difference, the balance of everything after these adjustments minus the total we have here? That is being split between the partners after this replacement reserve. So yesterday we didn't have this. We didn't have a replacement reserve, remember? Okay. So that's all that I wanted to quickly illustrate to say, okay, can you see now what I was talking about yesterday when I said if you have a replacement reserve, that's how you work with it. Okay. All right. This money is basically replacement reserve that we had prior to the end of the year. Because remember, this adjustment is happening. These adjustments are happening at the end of the year. Okay. Sweet. So that is question 5, I believe. So I want to deal with question 6 last, because question 7 is pretty much the same as question 5. It's only that now they were dealing with a CC. Okay. So here they asked open, post to, and balance the appropriation account for the year ended 31 July 2020. So I want to check something. Did I hope I hit. Yes, I did. Okay, that's fine. Okay, guys, we're almost done. So just hang in there. Okay. So here you have your retained earnings, right? For the 1st of August 2019. So that's it's going to be your opening balance there. Then here they've told you with regards to the financial year end, 31 July 2020, the following information was available. Okay, we'll get into that. But here you'll see they registered on 1 August 2015. The founding statement of the CC sets out the following. Okay, the nature of the business, a spare parts retailer, the names of the members and their interests and contributions made on 1 August 2015. Okay, this is not relevant per se for us because except for when we want to distribute the profits. Okay, the following balances amongst others appear in the CCs at the end of the financial year. Okay, member contributions. Okay, and then retained earnings, and then obviously there's this information. 31 July 2020, the CC recorded profits of 940. We need this information. Okay, the profits was after taking into account transactions with members like remuneration. Okay, so this is taking into account transactions with members, so that's good. Then income tax for the year calculated 260,000. The members were entitled to distribution of profits of 45,000 each, irrespective of how long they have been a member. So in this instance, can you see we're actually not distributing profits based on their interest in the business, but actually just giving them 45,000 each, okay, which is probably less than what they would have received had we done it by way of interest. Okay, so here all you needed to do was open up your appropriation account. Okay, open up your appropriation account. Oh, no, sorry, that's the wrong question. I want the very last one. Okay, open up your appropriation account, say retained earnings. Boom, there you have, there you go. Then your profit and loss, 940. All right. Then you come to the other side, income tax. All right, we've paid it out, money leaving us. Then distribution to members. Remember, there's 3 members, and each is getting 45,000. There you have it. Then we know that the difference, whatever remains, is obviously then going to retained earnings. Okay, right. So that's all that you needed to do over there for question 7. Okay, that's all you needed to do there for question 7. And question 6 is another. This is on unit 7. Unit 7, and here under the required, they said calculate the profit for the period. Okay, you can use any method or layout to do so. Okay, so what they did for you here, I'm just going to tell you about it, and then we'll go through it quickly. Remember, this is unit 7, and what they've done is they have given you information on an entrepreneur or a business that obviously is not recording its financials properly, okay, because it's a small medium enterprise, okay, and then they want you to obviously calculate the profit. All right, in other words, make sense of all this information that you've been given in order to calculate the profit for the business. So let's quickly read through the question and see what they have given us. Okay. Now here is where now you use the information that I've given you on the slides. Okay. So maybe it would be easier because I know your minds might be a little bit tired at this point already, because you've just been listening to me speak and speak and speak. Remember the steps in transforming the single entry system. All right, you want to gather as much information as possible, firstly. Then you want to determine the value of net current assets, determine the fair value of inventory by means of a stock take, calculate owner's equity. All right. At the beginning of the financial period by deducting total liabilities from total assets. All right, as at that date. Okay. Then you want to go on to prepare the cash book and post to the appropriate accounts. Then you want to determine the sales from the debtor's control and the purchases from the creditor's control. Make adjustments of the amounts still outstanding, okay, for the period in advance, and then draw up a trial balance, and then draw up an income statement and a balance sheet for the period. Okay, those are the steps. Okay. Right. So here, oh, sorry, let me first read this in. So here, what have they given us? All right, so they tell us the owner of Time Traders requested to calculate the net profit for the year, 20 marks, 30 June 2020. Mr. Minute, the owner, has not been very diligent in keeping records. He has presented the following information. His assets and liabilities at the beginning of the financial year were as follows. So you've got equipment and carrying value, that's a non-current asset. Vehicles at carrying value, non-current asset. Trading inventory, current asset. Cash in bank, current asset. Debtors, current asset. Creditors, current asset. Loan, non-current asset. Okay. So I'd label all of those. Okay. Right. Then it goes on to say, bank statements show credit balance of 48,790. Credit balance, that means that this bank statement, the bank is in the negative, and that's on 30 June 2020. Okay, so our bank account is now in the negative. At least it was in the positive at the beginning, but now it's in the negative. All the cash received has been deposited. Okay, and then it goes on to say, a stock take performed on 30 June 2020 showed inventory on hand with a cost price of 230,000. Okay, so there's your inventory right there at the end of the financial period. The debtor's balance on year end is 38,000, and the creditor's balance 16,225. Okay. All right, then equipment was purchased during the year at a cost of 5,000. Equipment was purchased. Okay, so in other words, your equipment increased by 5,000. Depreciation on vehicles for the year amounted to 20,000, and for equipment 15,000. All right, so you're going to need this because obviously to get your new carrying values on equipment and vehicles. The owner took 23,000 in cash for personal use during the year ended 30 June. So this is drawings. Okay, so as you're going through, you're labeling all these things and taking into account, so you know this is going to be affected by that, and that's going to be affected by this. 5,000 was repaid on the loan. This is obviously going to reduce your bank, and it's going to reduce the loan, long-term loan. So this is going to decrease your loan. It's going to decrease from 50 to 45,000. Okay, but I assume that your bank, remember here they said on 30 June. Okay, so I think they've already incorporated the 5,000. What's important is this 5,000 is going to affect the 50,000. That's where I think you need to obviously make the necessary adjustment. Okay, right. So now getting into the question. Remember our format. Okay, get as much information as you can. This is question 6. Here's question 6 right here. Let me just highlight that and then zoom in so you guys can see more clearly. All right. So, okay, right. So remember our steps again. You take all the information that you can possibly gather, and remember the objective of the question now is to calculate your net profit, all right, or net loss. But again, they did not tell us whether we had sales. They did not talk to us about expenses. So now what you want to do is you want to try and calculate your owner's equity, okay? And remember the steps they were saying, first get your, um, um, your non-current assets and stuff like that. So, and then they later on to calculate your owner's equity over here. What step was it? Step number 4. Okay. All right. So we have all this information and we are now calculating owner's equity. So assets first, get your total on your assets. Okay. We've listed, this is at the beginning of the year. Eh? We haven't yet looked at the end of the year. Beginning of the year, 75,000. I'm sure these numbers are becoming, then your 125,000. Okay. I just want to see something here quickly. I don't know why I said, so yeah, here they said at carrying value. So I think that was a mistake. They should have said at cost, because they did not actually give us depreciation for the year. So we couldn't get the cost value. Okay, but anyway, whatever. Let's proceed. So there we have it. You've put in all your assets. You got your assets total. You put in all your liabilities. Okay, there's only the creditors and there's that long-term loan. You got your 58,500 and you deduct it, you get your owner's equity. So this is the owner's equity at the beginning of the financial year that we're actually interested in. Then we do the same thing, but this time at the end of the year. Okay, so we have our assets again, get our total there. All right. Some of these things have changed. Sorry, I think what I did is I just copied and pasted. I hadn't actually amended the amounts, but I know this amount to be correct. Yeah, that amount should be correct. So here I was supposed to, because I did also amend the amounts here. Yeah, so my apologies. These are liabilities at the end of the year. Okay, as you can see, your creditors was changed. You can see your long-term loan, that 5,000, I incorporated it. So here also the amounts I was just supposed to quickly reduce those. So for instance, remember they bought 5,000 there. Sorry, let me actually do this now at the end, so there's no confusion. End of the year, so that's 80,000 there. Okay, and then here we didn't buy anything new for vehicles, so that stays the same. Trading inventory, remember they said we had 230,000 in trading inventory. Cash in the bank. So remember there was a negative amount of 48,079. Let me make sure I'm correct there. They said credit balance. Bank statement shows a credit balance. Yes. So that's going to be a negative. Debtors. What did they say your debtors was? They said somewhere the debtors 38,000. Okay. So debtors 38,000, straight 38,000. Okay, right. So yeah, then you add that up. Then the depreciation. Remember, they gave us the depreciation. Depreciation was the 15,000 plus the 20,000. 15,000 and the 20,000. Let's just, I don't remember which one was which. 20,000 was for vehicles and 15,000 was for equipment. Okay, happiness there, right? So that's how we got that, and then that's how we got to this figure here. All right, and then we said, okay, creditors, we have 16,225. They gave us that information, and then here we had to deduct 50,000 from 5,000, as I mentioned earlier. Then we got this total here for our liabilities. Again, this is at the end of the year. End. Okay, and okay, so when we deduct, now we see our owner's equity at the end of the year is 425,565. So remember, in that formula that I showed you up top here, I'm going to copy it and bring it down. This one. Copy and paste. So question 7, remember what I told you guys about question 7? Chapter 7? That it is a test on all your knowledge on accounting in 1A and 1B. Okay, so can you see here now? They're testing you to see, do you know that, how well do you know changes in equity? Because if you can see the movement in equity, you know that it's typically as a result of profits and of drawings and any additional contributions. That is what's going to give you a change. So they didn't tell us that we didn't have any additional contributions from the owner, right? So let's remove that, okay, right? We did have drawings, however, okay? So if we want to establish, and we did have our new capital balance, okay? So if we want to now do a little bit of maths here, that's what we're actually doing. We're then saying our old capital balance, and can you see I'm removing it, all right, from that side of the equation and taking it here. We're saying our new capital balance minus our old capital balance. Maybe I'll even just put an O here just for clarity. Old capital balance, right? We didn't have any contributions, so I deleted that completely. Then we're saying now we want to take off drawings so that we get the profit. So we're going to leave our profit there, or loss, but in this case you're going to see we obviously made a profit. Okay, so maybe I should have actually just, yeah, okay, well, too late for that now. All right, then since we flipped it over to the other side, it's now going to be a plus drawings. Okay, then going to give us our profit for the year, and that's what you can see is happening here. So we are saying new capital balance minus your old capital balance, then plus drawings, okay, because here they've already gotten the difference, so plus drawings, all right, and that's how we're arriving at our final answer of this 63,565. Okay, so this is a wild question because I know, it's one of those, if you've never seen anything like this, you will be like, what are we supposed to do? So like I said, guys, please make sure that you're practicing your questions in Unit 7, and you're obviously going through past papers, because if you're going through past papers, you're going to stumble on these type of questions and see what it is that they ask from Unit 7, all right, and get a feel for, okay, this is how they want us to be addressing it. But that said, I hope these revision sessions have been useful. Please give me a thumbs up if they've been useful to you, if they've added value. And if you also have any additional questions, now would be the time to ask. Otherwise, from my side, I'm done. Okay, thank you, Muzamil. Okay, thank you, Manzini. Appreciate it. Appreciate it. So yeah, like I said yesterday as well, if you go under past papers, you'll see there's some suggested answers that I've given you, and also there's some past papers. They all say 2018, but they're different. So please take advantage of that stuff. Practice, practice. The 1st of December is not far. So let's make it happen, guys. I know you guys have done well. You fought up until this point. So let's just finish the battle. Only thing that's standing in our way is that exam. So let's make sure that we're ready for it. Okay. Otherwise, that said, that's it from my side. Otherwise, all the best for the exam. Take care, guys. If you have any questions, I'm just ending the recording, but you can ask away.